Hey all, welcome back again to the pre-market report by Invesfinc. In today's video, we will share the outlook on Nifty, Sensex, Banknifty and FINNIFTY for 29th May 2025. In addition to this, we will also be sharing the trending stocks from today's trade. So stick with us until the end of the video. Before we jump into the details, please go through the disclaimer. Now let's begin on the analysis on Nifty. So we are in the daily candlestick chart. So as we had discussed yesterday, so market had been unable to cross beyond this 24,800 odd levels. Now whenever we tried approaching at this level, first here and then second here, we saw significant sell-off. And in fact in yesterday's trading session as well as the close of the day in our pre-market report, we very clearly discussed that if the market has to move up, it has to cross beyond this level, which is around 24,800 or 850 odd levels. If we see, those levels getting crossed, only then we should initiate for buying. And if today the market opens flat and trades below this particular zone, what we had, marked yesterday, then that would initiate or indicate the selling pressure coming in. So there was already a weakness that we had seen in yesterday's trade, and that weakness in fact added today by Nifty closing, opening literally flat, and then there was a selling pressure that came in. Though multiple times it tried to move in a positive zone, but at each time it approached at the higher levels. From there, we started seeing the selling pressure coming in, and ultimately we dropped around 73 points, though it is not huge, roughly around 0.3%. But today's session was very crucial for markets to decide as to towards which direction the market is expected to move. And for tomorrow, being the expiry on Nifty, it is very evident that if we open maybe gap down or slightly at the same levels where we closed, in fact today or maybe yesterday, then there are high possibilities of that selling pressure to continue, because not many traders would have exited their positions with this kind of pattern what it had created. So this suggests that there is still sellers having better control on the positions. So now if tomorrow it opens flat, then there would be further pressure that would be put from the call writers, which would lead to Nifty falling further down. Now this would have a bearing on tomorrow's expiry, given the fact it is a monthly expiry for Nifty along with other indices like Banknifty and FINNIFTY. So any movements, negative movements there, or a lot of sell-off on the banking stocks would also have a major impact on the Nifty. However, compared to the major indices, Nifty 50 and Sensex, Bank Nifty and FINNIFTY at least were in positive today. Slight green, but yes, that still doesn't give that positivity. So overall, for tomorrow's trade, as long as we are trading above this particular range of 24,500 odd levels, there is not significant something to fear. And on the long side, around 24,800 odd levels still remains a kind of crucial zone for us. So once we see significantly we crossing that particular level and closing above that, only then we can consider it as a positive trade. Else if we should be trading in a consolidation or a range bound kind of scenario. So now for tomorrow's trade, keep close eye on 24,500 levels on the lower side, and on the higher side if it crosses yesterday's high, that is around today's high, that is around 24,864 levels, and start trading beyond that, then we might approach towards 24,900 odd levels, and if we sustain towards that, then there are high possibilities that at 24,900 or 25,000 we might close for the expiry. But if we start trading lower and then this continues, then we can see 24,600 odd levels, and if the sell off continues or pressure mounts further, then 24,500 levels could be seen for tomorrow's expiry. So volatility could be expected. But the other dimension what we want to look at is when the markets had opened today, so we saw the high VIX in today's trade. So the India VIX moved towards 19 levels, and today's premiums were similar to the premiums that we started off this entire weekly expiry with. So uh, the other way what we can look at is tomorrow could be much peaceful and calm day without much volatility on the indices, because majority of the operators would have entered today to take trades, so that tomorrow they would not make any fluctuations in the market and peacefully enjoy that high premiums, given the fact that we had high wicks that led to the significant premiums that they could have captured in today's trade. So this is another way of looking at it. But overall, the trade suggests that we will be in the trading in the range of 24,600 to 24,800 odd levels, just the 200 points range that we can expect for tomorrow's trade. Now let's see from the perspective of open interest. On open interest, if you see at the higher levels, we will surely see that there have been additions in the call writing. So as you could see, 25,500 odd levels, 300 odd levels, and at every 100 levels, somewhere around 24,800 odd levels. Also, we saw open interest positions got added. Now, on the other hand, if you see at all the higher strikes where the put writers had initiated the trades until 25,000, we saw some unwinding happening. So that suggests that there are very limited possibilities for Nifty to start trading beyond 24,850, sustain there and move towards 25,000 odd levels. Limited possibilities, but yes, because it is an expiry trade, we need not to like closely be sticking with just the analysis. We should be open for any kind of adaptability during the trade, because it is majorly about the operators game. When they bring in with big huge flux of money, they can surely move the markets. So 25,000 would be the range maximum on the higher side, and then on the lower side 24,500 odd levels. So within the 500 point range we should have the expiry. But overall, considering the way how the premiums were today, so we expect that it should trade in the range of 24,600 to 800 odd levels. That's it. So 200 points should be the range for tomorrow's expiry. On the PCR front, it is zero point 0.7 overall, which is slightly positive, and at the money it is 0.6R, 0.63. So still positive to okay kind, but not something which would give a very clear indication on the positive momentum. Now moving on to Sensex. So Sensex also had shown some selling pressure and it was unable to move uh, compared to the previous trading sessions range. So it was just a flat around 600 points range, in which the 400 points range in which the Sensex had moved today. So tomorrow's trade again evidently signals that if the selling pressure or the market when it opens at flat or low, then that selling pressure would continue, because from last 2 days the sellers have been intact and they have not let the market move up in today's trade too. So if it opens flat, they would continuously put a lot of pressure and approach towards these levels of 80,800 odd, from where we saw the significant up move or rally. On the higher side, if we cross beyond 82,400 to 500 levels, then that would be a turnaround for Sensex, which for a very long time we have been trading in the same zone. So now if any positivity that comes in as part of the monthly expiry on the other indices, NSE indices, then that could lead to a significant up move once we cross 82,000 to 82,500 odd levels. Then it would open for the next leg of up move towards 84,000 levels, but seems to be quite difficult for this weekly expiry too. Now let's see from the perspective of open interest. So this is the second day when we have been seeing that there have been a lot of straddle positions getting created at 81,500 odd. So we saw at the higher levels some open interest positions got added on the call side. Similarly, at the lower strikes, there have been around 40 to 50% of open interest positions at every 500 strikes that got initiated. But the major focus should be at this level. So in the range of 82,000 to 81,000 is where we see significant built up in open positions happening, and typically 81,500 is what we see major concentration. Now once we cross 81,500 decisively, then that would open for further 82,000 odd levels on higher side. And if we pressurize the way how the Sensex have been trading in the last 2 days, then we will open towards 81,000 odd levels for tomorrow. So this would be the range for tomorrow's trading on Sensex. PCR is 0.5, which is not that great overall, and at the money it is 0.79. This is significantly because of the open interest positions which got added at 81,400 and 300 odd levels. So overall, with the charts, if we look, it seems to be a kind of consolidation or a negative trade on Sensex. Moving on to Bank Nifty. So Bank Nifty had showed slight positivity in today's trade. We opened flat and then moved towards the higher levels, but we were unable to cross this previous range of around 800 odd points. So now today we closed inside this particular candle itself. So this suggests that tomorrow we might expect a consolidation trade on Bank Nifty despite a kind of green candle which is again indecisive that got created. So overall it was just a 64 point move, 0.12% on Bank Nifty. So for tomorrow's expiry, once we cross 55,500 odd levels, that would if that sustains, then we will approach towards 56,000 odd levels, which is the zone for a very long time in which we have been trading. So let's see if in tomorrow's trading session, if we cross those 500 odd points and jump towards 56,000 odd levels. Else if we will trade in this entire box in the range of 55,800 levels to 54,800 odd levels. So on the long side, it is just like 300 points for Bank Nifty to move or achieve. On the lower side, it is 500 to 600 points down, where it has to come down in case if those negative trades are expected to be seen. So overall, from the perspective of charts, it suggests that we might trade in this same range. May not break even 55,000 and may not cross 55,800 odd levels. Now let's see from the perspective of open interest. So open interest from a very long time on Bank Nifty has been sustaining and showing that positive trend. So despite Bank Nifty closing below 55,500 odd levels, we do not see addition in the open interest. In fact, at every higher level on the call side, we see some unwinding that had happened until 56,000 odd levels. And then at every 100 strikes, we have open interest positions that got built up. On the lower side, if we see below 55,500 odd, then we have only one strike at 55,000 where we see significant unwinding and then small unwinding here on the put side. But something surprising was at 53,000 levels, we saw a significant unwinding happen. Could be that Bank Nifty may not, move towards those lower levels. That is when majority of the players would have cut down their positions at 53,000 strike and then jumped towards 54,000 odd levels. So this had not happened, in fact, just in today's trade. So we don't see any additions here. But overall, some positions would have got added in all these kind of strikes where we see a lot of open interest positions that got built up. Considering the fact that we may not see significant downfall from here, at least on Bank Nifty. So 55,000 levels would act as a strong support uh, on Bank Nifty, and 55,500 would be the first resistance. If we cross significantly and trade above that zone, then we might approach towards 55,800 primarily, and then 56,000 odd levels, which we try to approach with the start of the month. So considering tomorrow's expiry, at least on Bank Nifty, we can see those positive trades coming in. And if you look at PCR levels also, it is zero point 0.8, which is quite positive, and at the money is also 0.85. So overall, from last couple of days, Bank Nifty have been holding quite strong at 55,000 odd levels, and the expiry will definitely be above those levels. High possibilities that we might have expiry beyond 55,500 levels too. So let's see tomorrow how it is going to trade. On FINNIFTY, again we had a kind of indecisive candle, which suggests that the sell-off might continue from here, or we might open in a flat zone and then trade positive. So if that happens, the key levels would be around 26,600 to 700 odd levels. Once we cross that, then there are high possibilities that we might approach towards 26,800 odd. So we are just around 350 points away from the all-time highs on FINNIFTY, roughly around 1 to 1.5%. That's it. Now, again on FINNIFTY, we have been trading in a quite tight range. So if we close below 26,500 odd level, sorry, 400 odd levels, then we might see a sell-off coming in and approach towards 26,000 odd levels. If we open positive and trade in the range of 26,500, 600 levels, there are high possibilities that we might close above 26,700 and approach towards 800 odd levels, which is the all-time highs on FINNIFTY. Now moving on to open interest. So open interest as well suggests that there is a significant buying that we could see at 24,400 odd levels, and again at 26,400 odd levels, 26,500 odd levels, and also some sticking around the open interest position continues at 26,500 odd levels too. So both on the call side as well as on the put side, we saw significant open interest built up. So this suggests that we might have a kind of tug of war stage tomorrow on FINNIFTY. So the overall range that is expected is 26,250 odd levels on the lower side would act as a strong support, and then 26,600 primarily, and then 700 levels is where we could approach in case if FINNIFTY turns positive and then there is significant buying that emerges. So overall PCR stands at 0.8, which is bullish, and at the money is also 0.83, which is significantly positive. So overall, financial services as well as banking stocks have been doing well and have sustained their rising momentum from the initial start of the month. So the closure would also happen towards the month high. So this would open for the next leg of further up move in the month of June, as long as if we do not see any significant bad news coming in from the US or maybe other parts of the world. Now let's analyze and discuss about the participants, how they have traded or invested in today's trade. So overall, FIIs have been adding their short positions on the index futures. So in fact, today also we saw they have added roughly around 11,000 odd positions on futures on the short side. So as you could see, as you could see, so overall net positions what they have been holding is 79,000 odd contracts on index futures. On index options, they have carried around shorts of 43,000 levels. So from the yesterday's shorts, I think some shorts have been cut off from their end to the tune of 21,000 odd contracts. So overall on call side, they are long, and on put side, they have taken hedge by going long 1.63 lakh contracts. So net FIIs are short by 43,000 odd contracts on index options. Proprietary traders on index futures do not have any significant positions. On index options, they have slightly carried over positive trade of around 8,000 odd contract. So majority of the positive trades have been cut off today. So this suggests that tomorrow's trade might be kind of consolidation day. So on call side, they have been long at 26,000 contracts, and on put options they have been again long at 18,000 odd contracts. So net they have hedged and not been carrying any significant positions for tomorrow's trade. On the client side, if we see retailers typically on index futures, they have been long to the tune of 72,000 odd contracts. On index options, they have been massively bullish to the tune of 80,000 contracts. So call options, they are short by 1.46 lakh contracts, and put options again they have hedged and shorted 2.27 lakh contracts. But still net they are long, carrying long positions to the tune of 80,000 odd contracts. So FIIs are short, DIIs DIIs meaning to say the clients or retailers are long. So tomorrow's trading session is going to be quite interesting to see as to who among these players are going to make a mark and make a good amount of money due to the expiry trading. Now, from the perspective of cash markets, not sure if there have been some block deals that are happening, because in fact even yesterday we saw significant 10,000 odd kind of uh, uh, investment done in the cash market from the domestic institutional investors, and today as well we see around 7,912 crores of investment made in the cash markets, and even FIIs have been quite bullish and added 4,663 crore in the cash markets. So at least from the cash market perspective, they have been going long. On the index side, some short trades have been taken. Now let's jump on to the significant, part of the video where we would be having interesting discussions on the key trending stocks. So first up is Life Insurance Corporation of India, LIC. So LIC stock today surged by a remarkable 8.12%. So this significant rally was primarily driven by the financial performance of the fourth quarter and the full fiscal year 24-25. So since the results were announced yesterday in the post market hours, that is when the market opened, so there was a gap up that we had already seen, and this gap up sustained, and from there we saw significant volume of positions that have been taken, and the stock continued to rally from the lower levels of around 900 uh, yeah, so roughly around 900 odd, and sustained towards 950 odd levels in the trade. So we approached around 948 levels on the higher side, and closed at 942 levels. So this suggests that the close has happened at the higher levels. So the major reaction for this 8% move was typically because markets had given a thumbs up on the positive results, or a standalone net profit of around 17,153 crores in the quarter ended March 2025. So this is a kind of significant jump of around 40% year on year increase compared to last year's quarterly results of around 12,245 crores as net profit. So this quarter and comparison of quarterly results from the previous year, FY24, if we see, this profit growth has been quite substantial, and that was the major reason why the markets had given a positive surprise and headed the stock towards the significant highs. So if you see, we have been trading in this range of around you know 300 odd levels, 250 to 300 odd levels. Now, since there have been quite significant positive results, though we have seen this run up from almost end of kind of April month. From there we saw this jump of around further 8% today, and with this great volumes, it evidently suggests that the first primary target for this particular stock would be to approach around 1000 odd levels from where we saw significant downfall. Now, if that happens, then we might start trading in this overall parallel zone, which the LIC India have been falling from very long time. So now this one positive results will take this stock at the higher levels, and we would see it trading beyond 1000 just maybe in a week's time. So a lot of positivity has been seen in the stock because of results. And if the management in their commentary says a lot of positivity that these premiums are expected to be received further in the coming quarters, then the overall yearly or annually profits would range towards 60,000 odd crores as net profits. So that would be massive when again compared to the previous financial year, 24 25 odd. So that would give a significant boost for the stock to trade positively and continue that momentum. Now next stock is Escorts Kubota Limited. So today we saw Escort significantly dropped approximately 4.5% and closed at the levels of 3,373. Now, if you look at the chart, so somewhere from this zone around 3,100 odd levels, we saw a sudden jump coming in, and this jump was not small. It was altogether around 16% from 3,100 level to 3,600 odd levels. Now, today's fall is not something related to results, but typically it seems to be a purely technical and profit booking kind of scenario. Now, why this profit booking would have come? Because if you could see on the charts, we saw a kind of gap up opening here and significant 2 days of jump, which is roughly around 10 to 12% jump from these levels of 3,100. So on 8th May, this particular trade, this particular candle, where we saw the results were announced on 8th May. And then the results were significantly positive, no doubt about that. The Escort stock saw a consolidated net profit of around 318 crores, which was like year on year jump of 18%. And also the revenue from operations increased somewhere in the range of 7 to 8% to the tune of 2,444 crores. And because of the positive results, the company had also announced the final dividend of around 18 rupees per share. So all was going hunky-dory. There was a positivity in the stock, and that is when immediately in the next 2 days we jumped around 12%. And from there we saw a kind of consolidation phase. So the stock was unable to cross beyond 3,600 and was not even falling below 3,450 odd levels. So whenever you see after a significant jump, there is a kind of consolidated trade. And usually it is expected that after this consolidation, the stock should again give a further jump. But however, in this case, it had not given a jump, but there was a significant drop. So this suggests that the operators who had bought the stock at the lower levels, because could be there is no positivity, or because of high competition that is anticipated, or on the longer term perspective, their analysis is not something very positive compared to their competitors. That is when the operators or traders whosoever have initiated the calls here would have started selling off, and that is when we saw a significant drop, and this drop was with good volumes too. So now it is very evident that the first leg of around 3.5 to 4% is already cancelled. Now we might see again further sharp falls coming in from here on, and then we would approach towards these zones again. So if we cross below 3200 levels, then there are high possibilities that this stock would see a sharp downfall, approaching towards the previous levels of 2850 to 900 odd. So we have to remain cautious in tomorrow's and the subsequent trades on Escorts Kubota. So overall, if with such volumes the selling pressure has come, that means there is something not that great in the charts, as well as fundamentally in the stock. So that's it from our side in terms of analysis. So if you found this today's analysis insightful, please give a thumbs up to our video and share it for the maximum reach. I as well want to encourage you to subscribe to our channel and hit the bell icon so that you do not miss the daily episodes of the pre-market report. So thanks for watching again, and we will see you in the next video.